Are you trying to figure out at what price Rivian stock makes sense to buy? Me too. And today I want to spend a little time using some data to show you how I analyze a stock. And I'll do that by looking past the day-to-day swings in the share price that the RIVN stock ticker is showing. I'll examine some details on how much Rivian expects to ramp up production, which will lead me to a detailed future revenue forecast using some projections that we have heard, but also using some in-depth analysis for what we don't know. And then I'll take that information and figure out what that could mean for finding a reasonable price range for the stock by using a common valuation measure and relatively applying it to a competitor in the EV industry. And no surprises here, I'll use Tesla. If you're interested to see and learn how I come up with this, stick around. Welcome to Healthy, Wealthy, and Wise. I'm Kevin, and today I want to take a deeper look into Rivian stock and show you a process I'm going to use for figuring out a reasonable stock price for a newly public company where the information so far is limited. While I'm applying this process to Rivian, you could use this process with any IPO when you're considering valuation for yourself. If you've been watching the yo-yo of the Rivian stock on your watch list and struggling to come up with a price that you're willing to pay for the stock, I think you'll find this video helpful. While there is some subjectivity here on selecting a Rivian stock price, and you'll see what I mean by that, I will share with you an exact price that I personally feel is the upper price limit of where the stock should be bought at based on the current available information. This video isn't so much about that price, although it's interesting to see what it is. It's more about me showing you how I got there so you could use this process for yourself. So for those of you in the community that have watched me in the past, you know I've been talking about Rivian before they even filed their IPO. And then once they did release their S1 filing to the public, I put together a comprehensive video detailing the highlights of what was in it to help you get prepared for the Rivian IPO. And then during the week of the actual IPO, I updated the details of the offering in a separate video before capping off the coverage that week with a live stream reviewing Rivian's first day of trading. So obviously, we've been talking a lot about Rivian, and there's still a lot more to talk about now that it's trading. Now if you're new here, definitely consider subscribing to the channel. After all, it's totally free, and it'll make sure you don't miss any upcoming videos I have on Rivian or other interesting DIY investing videos I have for you. And if you want to hear the latest on Rivian, like as soon as they upload a new video or have another live stream, you can turn on your notification bell so that you know the exact minute it comes out. Alright, we got a lot to cover, so let's get into this. There's been a lot going on with Rivian stock since it began trading, and obviously the stock price has been the biggest story. The actual IPO was priced at $78 before opening almost $30 higher when public trading began, with it finally closing that first day down a little till around $100. And then it started to go up, and up, reaching the $170 range before pulling back pretty sharply. For those of you that have invested in IPOs in the past, you know this volatility is pretty common for companies when they first go public. It's a combination of the hype and the fear of missing out that drives a lot of these early swings. Well, today, I want to look past all of that and take a look at what we can expect Rivian to produce in the next couple of years as far as revenue, which can help us to evaluate the initial part of Rivian's growth story when it comes to sales, which have only recently started. I'll also touch on what the company could be doing by 2030 based on some of the reports out there, but I think we can come up with a more accurate forecast by targeting where Rivian could be as early as 2024 if things go super smooth, but most likely by 2025. And what we come up with can help us figure out a Rivian stock valuation. As we get started, please remember, I'm not a professional stock analyst or a financial advisor, and definitely not someone that has the ability to predict the future. I'm just taking the information that's out there, analyzing it, and then sharing my own thoughts in what I hope is an easy to understand way so that it might be helpful for you as you're doing your own research. And of course, I'm not making any recommendations on whether you should or shouldn't buy the stock. That's completely up to you. I trust you in making the best decision for yourself based on your own research and situation. Alright, so let's start with what we know right now. Going into the IPO, Rivian basically had no sales to report as they were just starting to deliver vehicles. By the end of October, they had only delivered 156 of their R1T trucks. And for the last week of October, Rivian reported being able to produce 104 vehicles per week. But we also know that they have solid demand in their vehicles, as they say they had approximately 55,400 consumer vehicle pre-orders in the United States and Canada from customers who each paid a fully refundable deposit of $1,000 by the end of October. And we also know that they have an agreement with Amazon to produce and deliver 100,000 electric delivery vans and plan to complete this by 2025. Okay, so that's a quick update on what's happened so far. Now let's talk about what Rivian is forecasting, and we know some of this too because it's right in their S1 filing. By the end of this year, they expect to deliver approximately 1,000 R1T passenger trucks and then 15 SUVs, which they call their R1S. And then on the commercial side, they expect to deliver 10 of their delivery vans to Amazon. And then, based on reporting, we expect them to ramp that up to 10,000 vans by the end of 2022. A little further out, based on their current production forecast, they expect to fill their pre-order backlog by the end of 2023. Now, they've said that their lone manufacturing facility located in Normal, Illinois is currently equipped to produce up to 150,000 vehicles annually, which would include a combination of their initial trucks and SUVs built on the R1 platform, as well as the Amazon vans once they're operating at full capacity. Rivian has shared that the breakdown of their current annual installed manufacturing capacity for the consumer trucks and SUVs would be 65,000 vehicles per year, and the capacity for the commercial delivery vans is about 85,000 vehicles per year. They don't break down how quickly they expect to ramp up production to the full capacity, but just that they do expect to hit a total capacity of 150,000 vehicles per year by the end of 2023. Now, in one part of the filing, it was stated that they believe that they will be able to increase the annual production capacity of the Normal factory up to 200,000 vehicles in 2023 by expanding the facility, as well as by introducing additional R1 platform variants, which again is the underlying platform for their initial consumer vehicles. So as we walk through this, let's keep in mind the number of 150,000 vehicles being produced annually with a possible upside of 200,000 vehicles. That's where we'll start with making some revenue predictions, which will eventually plug into a measure of valuation. Now, having a production rate is helpful, but when it comes to revenue, we need to figure out how much we can multiply that rate by. So the next thing we have to do is look at what their vehicles can sell for. While pricing starts in the upper $60,000 range for the R1T and right at $70,000 for the R1S, there are obviously packages and add-ons that can bring the price up. Looking at the options available and the prices with them, and considering how many might upgrade or stay at the base price, I'm going to estimate an average sales price of $74,000 when I combine the truck and SUV sales together. So just from the sale of the consumer vehicle itself, if we take that $74,000 and multiply it by a Rivian forecast of 65,000 R1 platform vehicles being produced at max capacity by the end of 2023, that would result in $4.81 billion annually going forward. Now that's just the consumer side, so let's put that number aside for a minute. Next, let's move on to the commercial side. Now, estimating the commercial delivery vans being sold to Amazon is a little trickier because while we know there's an agreement, we don't have the pricing terms. And then, of course, there are 3 different sizes that they'll produce: 500, 700, and 900 cubic feet sizes, which makes it even more complicated. But taking a leap here and considering the early bulk order from Amazon, having Amazon owning somewhere around 20% of Rivian, looking at the potential resale value of a van, which you'll see in a chart in a minute, and looking at Ford, who also has invested in Rivian, and they have already announced pricing in the mid $40,000 range for their own electric cargo van, which is most closely sized to the 500 cubic feet size, I'm going to take a stab and estimate that the average cost for Amazon to buy the 3 different size vans will be around $40,000. Although I could see the smallest van being in the mid 30s. Again, just to be clear, this is only my personal estimate. If you have something more concrete, please share a link in the comments so we can all take a look at it. Anyway, let's say I'm close and that each van on average is sold for $40,000 and Rivian sells at the max annual capacity by the end of 2023 up to 85,000 vans. That would generate annual revenue of $3.4 billion. So adding up the $4.81 billion for their consumer products with the $3.4 billion coming from the commercial vans, we come up with sales or revenue of roughly $8.21 billion. But we're not done counting revenue because if you watched my Rivian IPO analysis video, you know Rivian expects additional revenue over the life of each vehicle sold. The company defines the lifetime revenue potential of their consumer and commercial vehicles as the revenue that they can generate from a vehicle throughout its lifetime if the owner was to use and subscribe to all the additional services and accessory products that they offer. For a breakdown of specific areas for additional revenue projected by Rivian for each vehicle sold, check out the chart on the screen that came in the S1 filing. Some of the highlights are that they assume that from each vehicle they sell, they'll earn about an additional $15,500, which includes autonomous driving capabilities of $10,000, and a monthly subscription plan for infotainment, connectivity, diagnostics, and other services valued at $5,500. They also expect to earn lifetime revenue of $3,500 for the service of each vehicle and additional revenue for financing, as well as additional revenue for their commercial vehicles. When they add in resale of the vehicles, Rivian believes that the total additional revenue that they can obtain from each vehicle sold, which, as I mentioned in the IPO preview video, is on top of the original price someone pays for the vehicle, is $67,900 for each consumer vehicle and $64,600 for each commercial vehicle. Now, I had a great question in the comments from a viewer on one of the other videos as to why resale of the vehicles are included in this. And the reason I included it is simply because that's what Rivian is forecasting. Where I can, I try to use information in the areas that are projected by Rivian and then supplement those with a fair estimate that I try to come up with on the areas that they don't tell us, such as the average price each cargo van will be sold to Amazon. So anyways, that's why it's in there. But when we're thinking about how to add this revenue, we realize that this revenue isn't coming each year, but over the life of the original owner having the vehicle. So of course, to find a yearly amount, we need to determine what the average life of these vehicles being owned could be, right? Now, using what Rivian stated in the filing, I'm going to use their number of 10 years. Now, one thing that you probably noticed in the chart is that resale revenue is a big chunk of the lifetime revenue potential. But obviously, the resale portion of the lifetime revenue is going to have to build up over time. And full realization of that number probably isn't happening until they are manufacturing to capacity at the end of 2023, and then add 6 years to it, which is the number Rivian projects an average resale age. So this gets you close to 2030. Therefore, looking at 2025 revenue, I made the decision to not count resale into the equation. When I look further down the line to the end of the decade in a future video, I'll add it in then. Anyway, to get this additional revenue number, I'll take the lifetime revenue of the consumer vehicles of $67,900 that Rivian projects and subtract the resale value of $34,500 and come up with a number of $33,400. And then I'll divide that by 10, the average number of years Rivian projects their vehicles to last. That would give them additional revenue of $3,340 per consumer vehicle per year. Again, we expect them to produce 65,000 consumer trucks and SUVs by 2025. And so by multiplying 65,000 by 3340, we get $217 million of additional revenue per year on the consumer product side. Now we need to look at the commercial side. For this calculation, I'll take the lifetime revenue of the consumer vehicles of $64,400 and again subtract the resale value of $19,800 for the same reasons I just mentioned and come up with a number of $44,800. And then we'll divide that by 10, which again is the average number of years Rivian projects their vehicles to last. And that would result in additional revenue of $4,480 per consumer vehicle per year. On this side of their business, we expect them to produce 85,000 vans by our 2025 target. And so we multiply 85,000 by 4480 and we get approximately $380 million of additional revenue per year. Now we'll take this $380 million and add the $217 million we came up with on the consumer vehicle side, and we have a total additional revenue of $597 million per year, which again is revenue aside or on top of the sales from the actual vehicles themselves. So I hope you're still following me and I haven't confused you too much, because now what we're going to do is add that $597 million of additional revenue to the total sales of the actual vehicles, which hopefully you remember is $8.21 billion. When you do this, you come up with an estimate of total annual revenue for the year 2025 to be around $8.8 billion. Now remember, this is my best guess revenue number that we can expect for years in the middle of the decade based on the available projections we have from Rivian, estimated pricing of the commercial delivery vans, and using the primary revenue streams in their business model. And this is based on producing 150,000 vehicles per year. But as I said earlier, Rivian also mentioned that they could potentially produce up to 200,000 vehicles in a year through some factory expansion and some tweaking of their platform. If that were the case, they could potentially push the annual revenue forecast up to $11.7 billion. Because that number takes in everything going perfect, I'm more inclined to stick with the $8.8 billion forecast as a more realistic number. And even then, you're expecting a lot to go right, which still might be overly optimistic for a company that has delivered less than 200 vehicles by the beginning of the month. After all, it is a new company and there will likely be some growing pains along the way. And it's not like we have a track record of seeing them outperform guidance at this point, and that's not to say negative or say that they don't know what they're doing. It's just that they are new to this, and it seems like this would be a more prudent approach. So anyways, when we consider annual revenue by the middle of the decade to be around $8.8 billion, what does this mean when it comes to thinking about our questions of price or valuation of Rivian stock? Some of that will be however you want to look at it. Some of that will be what you see happening later in their growth story, say where we're expecting the company to be in 2030. The issue for me is that 2030 has a lot more variables out there that are a lot harder to predict at this point as far as timing, including a story that recently broke that Rivian is getting close to naming the location for a second factory. Reporting by InsideEVs.com indicates that Rivian's long-term plans are to manufacture 1 million vehicles by 2030, and they would do that with 4 factories, 2 in the US, and 1 potentially in Europe, and another in China. So there's a lot of variables that you can consider, but a lot more uncertainty of what they can accomplish by 2030, so that might be best left for a separate video. For this one, we'll stick with the more likely forecasts I've come up with for the next 2 to 3 years that I just shared with you. Okay, so we know that Rivian stock has been in a pretty wide range since it began trading, and this again is common with IPOs as investors are trying to figure out what the stock is really worth. And while that's subjective based on each investor's point of view, looking at where they are now and the growth expectations, eventually, barring some significant news, the trading range will start to tighten. Now, as I've shared in the IPO preview video I had, there is a lot I like about Rivian, and there are also some significant concerns I said I have. The point of today's video is for me to add some more data analysis into those thoughts and see if I come up with a more objective price to where I think the stock might be appropriately priced at, or at the very least at a price limit that I cannot justify buying higher than. Because Rivian has just started to sell its vehicles, there's not a lot of financial data to work with. We also know that they lost about $1 billion over the past year, so they're far from being profitable, and we know that they won't be anytime soon. Since we're early on with Rivian being a publicly traded company and that they have yet to hold a quarterly earnings report with guidance, it's almost impossible to make a lot of concrete predictions. However, one thing I felt I could do was look at where revenue could be by the middle of the decade, which is what I just shared with you. Since I came up with a revenue number, I'm now going to try to figure out where the company could be valued based on a relative price to sales ratio. Now, price to sales is not the be all or end all for valuations and not the most thorough one, but it is an easy one to look at if we just have the projected revenue numbers, plus it's fairly easy to understand, being that it's simply the market cap divided by a sales or revenue. And then we can see where an established competitor's price to sales ratio is and try to make a relative, educated guess where Rivian might be expected to trade at if they were held to a similar ratio. As I said at the top of the video, Tesla is the competitor we're going to use, as they are in the same market of EV manufacturers, and while they've been selling cars for a while now, they still are considered to be in the earlier stages of their growth story. Keep in mind, this has nothing to do with which company is better or which company makes more sense to own. It's just a tool to use to come up with another way to figure out where Rivian could be fairly priced at. So looking at Tesla's current market cap, which as of this recording is $1.142 trillion, if we divided that by projected 2022 sales of $70.51 billion, we would come up with a forward-looking price-to-sales ratio of 16.2 using 2022 estimates. Okay, so if we take that ratio or number of 16.2 and apply it to Rivian's revenue that we just projected, which was $8.8 billion, we might expect Rivian to have a market cap of $142.56 billion. And that's assuming that you believe that it should be anywhere near where Tesla is, which I'm sure a lot of you don't think so. And you would have a good argument, mostly because Tesla has a track record that we can look at. Now, on the other hand, if you are all in on the Rivian story and see them hitting some of the potential targets we mentioned later in the decade, you might think that they should be close to Tesla's ratio in a relative manner. So where is Rivian stock trading at now? Well, after some volatility last week, as of this recording, it's at a market cap of $113.6 billion. Now, this is where you have to make your own conclusion. For instance, if you see Rivian as an early version of Tesla that can grow and execute like Tesla has, and you feel like Rivian stock should trade at the same forward-looking price-to-sales ratio, you could talk yourself into a target share price of $161.37, a price that the stock has already went past before falling back pretty hard from. But since it's trading lower than that right now, you could find yourself thinking that the stock is attractively priced. Now, however, if you think it's too early to value them out that multiple because you have concern that Rivian will face more hurdles than Tesla did, for instance, the amount of competitors that they'll be dealing with as compared to what Tesla faced a few years ago, which we know was much, much less, plus the time it's going to take to get to the revenue forecast, which wouldn't be until 2024 at the very earliest. Then you have to figure out how much you want to discount Rivian as you come up with a price. Because of some of the potential headwinds I've mentioned in the IPO preview videos, the fact it's going to take a couple of years to get to capacity, I would definitely discount how much Rivian stock should be priced at. The question is, by how much? Now keep in mind, we know that the shares were priced at the IPO at $78. And I feel this is important to know because this was the price that the big banks and institutional investors were willing to buy it at. And these are the people who make their living analyzing this stuff. That was at a market cap of $68.9 billion. If we take that number and divide it by the annual revenue I'm projecting of $8.8 billion, that comes to a forward-looking price-to-sales ratio of 7.83, which obviously is a little more than half of Tesla's ratio. Now another consideration. IPOs are often priced lower than what they expect to trade at, so as to draw up demand for the shares as well as to give off the impression that the IPO was a success by having a first day pop to talk about. Because of that, I'm willing to add maybe 10 to 15% on top of the IPO price for a company that I really like and think it could be reasonable. So by that way of thinking, maybe $87 would have been a reasonable price for an institutional investor on the market, because again, they're getting the IPO discount before the public has a chance to trade. So if we use that number of $87, we might see that they buy the stock at a price-to-sales ratio of 8.7 as being a fair value for Rivian. Therefore, discounting close to 46% of Tesla's price-to-sales ratio. Again, this isn't exactly apples to apples because the companies aren't exactly the same. Plus, we're looking at different years. 2022 for Tesla, which is the only projection data I have available, and 2024 or 2025 for Rivian, which is what I tried to forecast in this video because we don't have that. But while we're expecting much lower revenue from Rivian in 2022 as they continue to ramp up, when thinking about Tesla, we're also expecting a much higher initial growth rate from Rivian because they're basically starting at zero. So because of these factors, you'll have to make your own decision how you want to view them for yourself. So if I haven't lost you yet, which I hope I haven't, what does all of this mean? It just means that you have to figure out where you feel Rivian deserves to be valued out relative to Tesla. I think no matter where you fall in the range of supporting Rivian, based on where they're at right now, it would be hard for anyone other than the biggest cheerleaders of Rivian to value the company at a higher future price-to-sales ratio than Tesla. And if you agree with that, then no matter how much you like the company, it would be hard to justify buying Rivian stock at $161 or higher. But that's just my thoughts. Now it's your turn. What do you think? Feel free to let me know in the comments. And if you enjoyed this type of video, please push the like button. That way I know to make more in-depth videos like this. I enjoy doing them, but they take a lot of time, so I only want to do them if you're interested in watching them. And if this was your first time watching one of my videos and you stuck around this far, definitely consider subscribing. We'd love to have you on board. And one more thing, if you're interested in seeing some of my non-financial type of videos, I hope you check out my new second channel, How To with Kevin, where I show you other types of things I've learned to tackle. It's been a lot of different things so far. In fact, I just put out a video on how to edit YouTube videos like I did on this one. Anyways, I could definitely use your support on that channel as well, as we're just starting off. Thanks so much for watching. Good luck in trading, and until next time, have a great day.